Good afternoon everyone, and welcome to another Elliott Wave Forecast educational video. This time around we're going to take a look at the RSI. The RSI is the Relative Strength Index and is one indicator that every waver should know how to read it. We don't recommend that you make trade based on indicators, but as a waver you should use the RSI to first locate the wave 3 when you're going to be able to see using the RSI when the wave 3 took place. Second, you're going to be able to see when you got a 5-way swing within the market, and that way you know how you label a 5 ways, how you label a 3. And third, the RSI is going to help you with the definition of the pattern. Many traders don't know that the RSI help you how to define the pattern. Now, let's start with the RSI. The RSI, we use the 13, 7, and 3, but do not matter technically, is in a small different. Technically, you can use it the 14, 3 and 3, 13, 7 and 7. It depends, but the difference is going to be minimum if you use 13 or 14. So technically, this is the Singapore dollar in the 720 minute chart. And the first concept that we're going to take is how to outgrade or downgrade the RSI to see the subdivision of the wave within a big wave, right? So technically speaking, what I'm trying to say is, in these charts that you guys see right here, from here to here, we're labeling as a 1. And then from here is a 2. And then you're going to see that from here to here, all you have is a 1, 2, 3, 4, 5. So you got a 3-way move. Now, this should have a 5. This should be a 5. And each wave has subdivision of 5s, and each 5 you're gonna be able to identify even to the 1 minute chart looking at the RSI. That's what we call downgrading and outgrading the time frames, because the RSI read different in a different time frame, right? So let's start with the Singapore dollar here, and let's take away the labor for a second. So technically speaking, all you have in your RSI, looking at the RSI, you say, okay, 1 swing, 2 swing, 3 swing, and then you got a momentum divergence. When it's a move in a wave, the divergence in the RSI really start after the wave 3 of 3. Technically the 333, so you guys remember, because within this wave 3, proposal wave 3, you got 1, 2, 3, but the highest momentum within the RSI is in this wave 3 that started here and ended here. There is, because the whole wave 3 runs from here to here, but this wave 3 have from here to here a wave 3 of 3, and the wave 3 of 3 got another wave 3 right there, so which is this candle. Don't you guys see that this candle is very powerful? That's technically when the higher momentum in the small time frame happen, if you're gonna measure all the time frame. All right, so now looking at the RSI, you see 1, 2, 3 and divergence. Now the divergence happen from here, and then you see the big move. That's telling you that the wave 3 was extended, that the wave 3 most likely was extended, unless that, if you look at only at this time frame, unless that you count it like 1, 2, 3, 4, and 5. Now, this is on the 720 minutes. If let's upgrade the RSI, you go to the daily and you see divergency. You see that this high right here, you're gonna see that right here you don't get a single pip of divergency in the RSI. That's telling me that this is a three-wave move. Now you got a high with divergency, but the move right here goes in three-way. You guys see, that's ungraded. That's when you locate that you most likely are in a wave 4 within the RSI. The RSI from the lows, you got 1, 2, 3 swing without divergency. Now you go to this move, you identify that it's a three-way move in the short time frame, and then you're gonna be able to say that this is a flat that is taking place, that this is a flat that is taking place, and that this pair is gonna trade as we've been proposing to you guys, that this pair is gonna do a flat in a wave 4 before keep going higher. Here it's gonna do a flat, and then this high, which is the real 5, is gonna come with divergency. That's how you use the RSI to the outgrade. Now, downgrading. Let's locate now this little part. Let's try to see this move right here and see why we believe is a three-way move. From that, we're gonna go to the 60-minute chart. Okay, and that's the move right there. The 60-minute chart, that's the move. Let's see what the RSI say on the 60-minute chart. First, you notice that the high is the hardest risk on the RSI, which is telling you that this whole move is not a five-way move, because in a five-way move you should get this in the RSI. If it was a 5, this should be the highest risk, and you should get momentum divergency, because remember, in an Elliott wave principle, wave 5 is nothing more than a continuation of the trend when the C wave have divergence. In other words, the C wave lack momentum compared to the third wave. That's what the RSI help you out to locate a five-way move. Now, let's see this. You got 1, 2, 3, 4, and 5 swing, but because there is overlap right here, you notice automatically that this is not a five-way swing. In other words, that this is not a five-way move. So let's keep downgrading to try to find the count. We know it's a three-way move, so how are we gonna labor it? And then we go to the low right here, and we know, let me see, yeah, we go to the low and we notice that this high is a three-way. Look, 1, 2, 3. There is no a single pit of divergency right there. So this is a three-way move. And then you got 1, 2, 3. When you see that the low is the low, there is no divergency. When you see that, you're gonna notice one thing, that this is 3, 3, and then this is another 3. So you got three ways here. But you can notice right here that, let's locate now in the RSI this move right here, and then you're gonna see that. Let's get back there. and you're gonna see that from here you have 1, 2, 3, 4, 5 swing with divergence. Now let's make a point. When you get a leading diagonal or a C-way diagonal, that we're gonna do a video about it also, do not give you divergence in the fifth way, because the overlapping nature of the move. So having said all this move is A and a flat B, and then if you take a look in the small time frame at the move from here to here, you should get divergence. Let's see that for a second. Let's see if we can get it in the 30 minutes. Let me zoom it in. Okay, here you read 69.92, right here read 61. So you see you got 5 ways from here. You got 1, 2, 3, 4, 5. Look at the RSI. This is your higher read. It's lacking divergence in the high right here. Look at the high. The high happens to be in this candle. Look at the divergence, the bearish divergence. So the RSI, because you downgrade that the RSI, you are able there to see that you are able to see the right count. Because most waivers, what they do is that they look at this and say, okay, and it goes 3, 4, and 5. And then if it goes to the 7 and 20, let's say to the 720 original chart right there on the RSI, guess what? They're gonna say 1, 2, 3, 4, 5. Why? Because they see the divergence on the 720, but they don't understand that the divergence is due to, because it's a wave 3 of 3, the one giving you divergence, and that this move is a 3-way move. And then that makes a huge difference between a good waiver and a waiver that doesn't see that dip. Alright? That's one of the ways. That's how with this exercise we prove it to you guys how to upgrade the RSI or downgrade the RSI to locate the right count within Elliott wave. Laboring in the daily do not mean that you don't need to see each 5 ways within a daily structure. And that's why the RSI is the only tool that I use as a waiver. Look, 1, 2, 3, and this is a flat that is gonna test lower to here, and then from there the RSI is gonna test 27, which is the previous high of wave 1 or wave 5, and from there it's gonna bounce back. You follow me? That's how you label using the RSI. Now finally, to prove the count is correct, let's take this little drop right here and see how it looks like in the RSI. Let's go to the 60-minute chart right there. You do the same exercise. You go 1, 2, and then possible 1, 2, 1, 2, and you got this low right here. Look, this low read 34.19. Now the RSI is rating 35 on the this candle, 36. So you got divergence from the high. This can be an S 1, 2, 1, 2. I mean, it can be a leading diagonal when you got 1, 2, 3, 4, 5. But if it is a diagonal, most likely it's going to erase the divergence. But it's a 5 swing. What's going to happen? Straight back, and then you sell it. That's how the RSI help you to identify the wave, and that's how we use it technically to be a successful trader. So I hope you guys understand how to identify patterns using the RSI, identify that a three-way move do not provide divergency in the RSI, and that a five-way move provide divergency in the last leg. It should provide a complete five-way move, should provide three different peak of divergency. Why? Because in the wave 5 of 5 you also will see divergency. That's to finalize. Let me show you that's the case with this same pair. If you take a look at this pair in the monthly chart, you guys can see this. This is a monthly chart. You guys can see 1, 2. In the fifth way, you see 1, 2, 3, 4, and 5. Look the divergency on the last leg. But if you go on the weekly, that I have more data, and I contract my chart, look, you're gonna see that you got divergency within the wave 5, because the wave 3 of 5 is gonna test the previous divergency within the RSI. But if you take a look here, look, the lowest read happened here. Why? Because that's the wave 3 with the whole move that's coming from. We don't have enough data to see when it's coming from. Let me see. Yes, we got data there. Look, a beauty that I can prove it to you guys. From here, look, the lowest read is right here, and this is the wave 3 or wave 3. Look, 1, 2, 1, 2, and then goes down, wave 3 or wave 3, divergency within wave 3, a 4, and then look, the divergency on 5. So you see how upgrading the chart, we can locate the right count the same with downgrading the chart. Okay guys, that's for the RSI. Any question, email us and we can do, and explain a little bit more about it. Thank you, and I hope you enjoy it.